Hello everyone, myself SMRITI Sharma and I'm here to present the topic creative accounting. So, what is creative accounting? Creative accounting or aggressive accounting is a method which is used to manipulate financial figures. It does not violate the letter or the law of accounting standards, but it is very much against the spirit. Moreover, it will certainly not provide true and fair view of the enterprise that accounts are meant to project. So let us understand the meaning of creative accounting. Creative accounting refers to the practice of manipulating financial statements and records to present a misleading picture of companies' financial performance. This is typically done with legal boundaries, but it can involve bending accounting rules and using accounting techniques in an unconventional manner. And it is the term used to describe manipulation of financial information or accounting practices in the ways that may be legal but are misleading. Let us understand the motives for applying creative accounting. The main goal is to manipulate the financial statements that enhances profitability, liquidity, or overall financial health. The vision for applying creative accounting is obtaining personal gain, competition, attracting the investors, increasing or maintaining the level of the capital, buying time for not selling debt, forecasting about the future company performance. So let us see few techniques of creative accounting. The first technique is income smoothing. It means to fluctuate income over the time. The second technique is capitalization, which means capitalizing the cost of the assets on the balance sheet for boosting short-term profit. The third technique is off balance sheet. It is a strategy to move certain assets, liabilities, or transactions away from the balance sheet. The fourth technique is changing the depreciation. Uh, but we can use this by altering the depreciation which is calculated, and it can affect the timing of the expenses, potentially profit in short time. The fifth technique is aggressive accruals. It is intentionally increasing the accruals to make finance appear more solvent. So here are the creative accounting cycle, which involves cooking of the book, aggressive accounting, cosmetic accounting, innovating accounting, aeronomics, profiteering, earning MGT, and unaccountable accounting. So let us see the few types of creative accounting. The first type is judgment and prediction. The second type is artificial transaction. The third type is genuine transaction, and the fourth type is pushing boundaries of the law. So here are some few advantages and disadvantages of creative accounting. Let us first have a look in some of the advantages. So it provides short-term profit boost. It helps in meeting the expectations. It provides accessibility of funding, and it also helps in avoiding default employee morale. Now let us have a glance at the disadvantages of creative accounting. It leads to misleading of the stakeholders. It has its own ethical concerns. It leads to loss of trust, and creative accounting may also lead to lack of investors' trust and huge losses, and it provides a long-term damage. So now I would like to conclude with the topic of creative accounting. Creative accounting should be used if it is within the law which achieves the company's ultimate goal of increasing the stock value, and it must benefit the company in the short run and the long run. It can also be described as a process in which exploiting the loopholes in accounting standards to demonstrate the financial success in a biased manner. Creative accounting can temporarily make things look better, but if it's fragile and when it falls apart, the damage is greater than the benefits. Trust and honesty, transparency are the solid foundation businesses which should always stand on.